The AI scanned the whole market overnight, and its verdict on BlackRock Inc. is short. The exact entry, target, and stop are at the end of this video. First, the evidence, so you can judge it yourself. 3 layers of evidence, then the trade. Retail view first, patterns and indicators, then the institutional read, where smart money is positioning. Then the trade itself, at the end. Let's go. Okay, let's look at the chart. We're on the daily time frame, last 60 bars. Price action is in a downtrend of moderate strength. That's our primary directional bias right out of the gate. You can see the dotted lines on the chart. Green is our TP at $945. Red is our SL at $1075. Those are the 2 numbers that matter most in this whole video. Now this is the fun part. The pattern detector picked up 3 chart patterns on the daily: double top, double bottom, head and shoulders. I'm going to walk you through each one in the next slides and show you exactly where they formed on the price action. Pay attention to the labeled points. Those are the swings that confirm the pattern is real. Quick one before we dig in. If you're new here, join the traders who get this scan every single day. It's 1 tap and it's free. Pattern number 1, this is the double top. It's a bearish formation with 2 out of 3 strength. 2 peaks, Mo's on 10.91 $89. Measured move target, $956 more 90 $4. You can see on the chart exactly where the key swings line up. That's what confirms the structure, not just my word for it. The textbook measured move projection is 7.3%. That's the typical decline once the pattern fully completes. It's a guide, not a guarantee. So we still need our SL in place. Pattern number 2. This is the double bottom. It's a bullish formation with 2 out of 3 strength, 2 troughs. $918.15. Measured move target, $215.99. You can see on the chart exactly where the key swings line up. That's what confirms the structure, not just my word for it. The textbook measured move projection is +2.2%. That's the typical rally once the pattern fully completes. It's a guide, not a guarantee. So we still need our SL in place. Pattern number 3. This is the head and shoulders. It's a bearish formation with 3 out of 3 strength. Head $1,104.86. Shoulders $171.83. Neckline $224.90. You can see on the chart exactly where the key swings line up. That's what confirms the structure, not just my word for it. The textbook measured move projection is 8.4%. That's the typical decline once the pattern fully completes. It's a guide, not a guarantee. So we still need our SL in place. Candle signal number 1. A 3 white soldiers just formed on the last 3 candles. See the dashed box on the chart? That's where it printed. It's a bullish read with 3 out of 3 strength. 3 consecutive higher bullish closes. Strong, sustained buying pressure. What you want to see next is follow through on the very next bar. That's the confirmation that turns a signal into a trade. Let's talk key levels, because every trade is really just a conversation between support and resistance. On this slide, you've got 2 resistance levels above price, 2 support levels below, plus our TP and SL inside that range. If price breaks above R1 cleanly and holds it, that's the green light for the upside scenario. If it cracks below S1 instead, the long thesis is broken and you stand aside. The TP and SL aren't arbitrary numbers. They sit at logical inflection points, which is why this map matters more than any single indicator. On to the indicators. We've got composite score of 0.27, technical 1.00. Positive numbers lean bullish, negative numbers lean bearish, and what you're really looking for is agreement across multiple boxes, not just one indicator screaming. ADX is at 16, and that tells us we're in a weak trend regime. Important because some strategies only work when ADX is above 25. On-balance volume is bearish. That's a sneaky good way to spot whether the smart money is buying or selling underneath the price action. Now, here's where it gets interesting. Everything we just looked at, the patterns, the candles, the indicators, that's all the retail view. But the moves that actually pay, are the ones the institutions are positioning for. So let's bring in the institutional read, ICT and smart money concepts. On the daily chart, the SMC bias is bearish, with a downtrend market structure. The most recent order block is a bearish zone between 1,136 and 1030.30. That's where institutional orders are likely parked. We've also got an unfilled bullish fair value gap between 1020.23 and 1022. Price tends to revisit these imbalances. Most importantly, we just had a BOE's bearish move at 1024.42, a key structural signal that smart money traders watch closely. Next up, volume profile, also called VPVR. This tells us where the highest traded prices are sitting, which acts as a magnet for future price action. The point of control, the most traded price, is at 1054.59. The value area runs from 995.13 on the low side to 1128.47 on the high side, meaning 70% of all volume traded inside that zone. The signal here is bearish. Price 1032.00 is below POC 1054.59, but above Val 995.13. Bearish lean. Watch Val as support. Now, order flow. Since we don't have access to full level 2 tick data, we estimate the buying and selling pressure from each candle's close direction and volume. Over the recent window, buying pressure accounts for 55% of volume versus 45% selling. The overall flow signal is neutral. And to round out the indicator suite, 3 more advanced reads. Money Flow Index, the volume-weighted RSI, reads 41, signal neutral. Williams %R is at a 47, neutral. Chaikin Money Flow reads 0.09, bearish. Together, these 3 confirm whether the volume's actually backing the price move or whether it's just speculative noise. Now, even though this is a technical analysis channel, we always sanity check the fundamentals. Here, revenue's growing 27% year over year. That matters because it tells us whether the chart is rhyming with the underlying business, which is when the highest conviction setups happen. Zooming out for a second, let's talk macro. On this slide, you've got the primary trend, its strength, the ADX number, and the volatility regime measured as ATR%. Here's the thing, a setup that looks textbook in isolation can totally fail if the broader regime is fighting it. So you want to ask, is this trade swimming with the market current or against it? The 5-day and 20-day moves at the bottom answer that. News and sentiment are mixed right now. No dominant story pulling price one way or the other. When that happens, we just lean on the chart and trust the levels we drew earlier. By the way, the trade levels are coming up in about a minute. If you're finding this useful, join the channel now so tomorrow's scan lands in your feed automatically. Now, this is the slide nobody on YouTube actually talks about, risk management. On screen, you see the dollar risk per share, the dollar reward per share, and a position sizing table built around the 1% rule. The rule is dead simple. Never risk more than 1% of your total account on a single trade. So if you've got a $10,000 account, you're risking $100 max. And that decides the share count, not your gut feel. Get this right, and you can be wrong 10 times in a row and still be in the game. Get it wrong, and one bad trade can take you out. All right, after all that evidence, here's the trade. We're shorting near $10.32. Target sits down at $9.45. Stop loss above at $10.75. Risk to reward 2.03 to 1. That's the asymmetry we want. For every dollar we put at risk, we stand to make 2.03. Horizon, roughly 5 days. That's the setup. One more time. This is educational, not financial advice. Markets are risky. Trade your own plan. Never risk what you can't afford to lose. If this breakdown helped you, smash that like button. It actually helps the channel a ton. And hit subscribe so you don't miss the next deep dive. So zoom out for a second. What we just walked through on BLK, that's a short bias setup projecting roughly 8.4% from here. And here's why it matters. Every piece we looked at, the chart structure, the candle confirmation, the indicators, the institutional order blocks, the volume profile, the order flow, they all stack in the same direction. When you see that kind of multi-factor agreement, that's when the highest conviction trades happen. Now, here's what you do next. If this breakdown earned its spot in your feed today, smash the like button. It actually moves the needle on whether YouTube shows you the next one. Drop a comment with the ticker you want broken down next. I read everyone. And hit subscribe so you don't miss tomorrow's setup. Trade safe out there. See you tomorrow. Tomorrow morning, the AI scans the entire market again, and I drop a fresh breakdown on whichever ticker it ranks highest. Could be a stock, could be crypto. If you don't want to miss it, join the channel and turn on the bell. That way, YouTube actually sends you tomorrow's video instead of burying it in the algorithm. See you in the morning.